Hi, this video is going to look at how to do an ordinary level club account question. We're going to look at the 2019 ordinary level club account question for Callan Golf Club. So the structure and the layout of any club account question is the same. Up the top sentence, we have all of the assets and liabilities at the start of the year. Then in our receipts and payments count, we have all of the money in on the debit side and all of the money out on the credit side. And then at the end of the year, we have all of the adjustments on the 31st of December down at the bottom at the end of the year. With every club account question, the first adjustment that we do, I have the adjustments done over here to the right of the screen. The first adjustment that we do is the bar trading account. And this is where we enter everything with the word bar. So we have here to look at the question, we have bar stock and we have bar creditors. Here we have bar sales and bar purchases. Here we have bar stock and bar creditors at the end. We're going to factor all of these into the bar to get one figure, which is a profit from the bar for this golf club. So we put in our bar sales. Now in a higher level question, you might have debtors and debtors which you need to adjust. You would need to take away debtors at the start and add them on at the end to get your adjusted bar sales number. That's it there. Then you put in your opening stock and you put in your purchases. Now purchases do need to be adjusted. We take the 26,900 from here. But we need to subtract creditors at the start because they're obviously for last year's purchases. And we need to add on creditors at the end to get 25,600, that number there. Then we have closing stock, the stock at the end of the year. And then we take away our cost of sales to get our income, which is the bar profit. These green numbers are incomes. The second working we always do in in club accounts is subscriptions. And here we look at our subscriptions or our membership fees, but we have to apply the rule that at the start of the year we add any amount prepaid, which is 1,800. That's an AFL, an accumulated fund liability. And at the end of the year you add any amount due. So your actual subscriptions are 76,600. Now once you've got those two first adjustments done, then you go looking for other adjustments. We check the top sentence to see if there's anything else, which is due or prepaid. Not so much, so then we go down to the bottom. We've done number 1, we've done number 2, and indeed we've done number 4. But number 3 here, general expenses due. So we have to go over here and add on that amount due to the general expenses. And of course, because it's an amount due, it's going to be a liability. An expense due is a liability at the end of the year, so that would be a current liability in due course, and this is your expense. Then we look at our depreciation of clubhouse and depreciation of equipment at the end of the year. So I've done that over here. You have to take your depreciation. The clubhouse was worth 620 at the start. 3% depreciation is 18,600, and then the net book value is 601,400. And now we can just lift that into the balance sheet. But that 18,600 is an expense. Likewise, we have our equipment. Now at the start of the year we had 32,000 from the opening sentence, and then during the year we had this capital purchase of equipment of another 3,400. So we add that on. At the end of the year we have 35,400, and that's the number which we get 25% of, and that gives us 8,850, which is the expense, the red number, and then the net book value is 26,550. Once we have exhausted all of the amounts due and prepaid at the top, and we've exhausted all of the workings at the bottom, then we can look into the T account here and see if there's anything common to both places. So in here there are club lotto receipts, and then over here club lotto prizes. So we might as well net them together. The lotto receipts, take away the prizes, gives you a profit on the club lotto of 25,000, which is also an income. If it were a loss, it would be an expense. That's all of the adjustments done on an ordinary level club account question. So now it's just a matter of putting together the accounts. Now, the first part of the question asks us to prepare a statement showing the club's accumulated fund at the start of the year. Now at ordinary level, that is just the information at the top here, where it says included in the assets and liabilities of Callan Golf Club are the following. So we've got all of these entries. Most of them are assets, 2 of them are liabilities. We're going to enter them into the accounts and we're going to structure it as such. So we have our heading, accumulated fund for Callan Golf Club. We have assets as follows: the clubhouse, the equipment, the investments as an asset, land, the opening stock in the bar, and the opening cash. Now that cash, just to flag that, that's coming from here. But of course, at ordinary level, it's also listed up in the top sentence. So we add together all of those assets and we get 962,300. And then we look at the two remaining liabilities. We have an income prepaid, which is a liability of 1,800, and we have creditors, which is a liability of 3,600. We add the two of them together, and then we subtract our liabilities from our assets, and that gives us our accumulated fund. This number here, essentially, what is the club worth on the first day of January 2018? Now then we have to look at our income and expenditure account. Now, with the income and expenditure account, the first thing we do is we exhaust all of the workings. So we're going to put in here all of the entries which are in green, and then those are the incomes. And then if we have any more, if we've exhausted that, then we can go and take anything from the debit side of the bank account here as well. Okay, so let us go back and see what that is. That will be bar profit and subscriptions and the profit on the Club Lotto. And then we will go back here and we will put in now. The balance will not go in, but we will have investment interest. Bar sales is already rolled into this number, so no need to put it in again. The Club Lotto receipts is already rolled into this number, so no need to count it twice. Subscriptions is already factored into this number, so no need to count it twice, but we will have annual sponsorship. So therefore, the income, there are 5 of them: bar profit, subscriptions, and lotto directly from the workings, investment interest and sponsorship directly from the T account, the receipts and payments account. We add them up to get 134. We're going to do the same structure and the same system for our expenses. First things first, we're going to exhaust our workings. We have general expenses and we have 2 depreciations. When we have those exhausted, then we will refer to the credit side of the T account. Now, Club Lotto already rolled in here. We won't count it twice. Bar purchases already dealt with here. We won't count it twice. General expenses, we've adjusted it. We won't count it again. There is insurance to be counted, but we will not count the capital purchase of equipment, nor will we count the closing cash balance, which will be a current asset. So therefore, to go back to the accounts, you'll see that we just have 4. These 3 come in from the workings, and then the 4th one coming from the credit side of the bank account. And then we just subtract the expenses from the incomes, and that will give us 74,450, which is our surplus for the club. We don't call it a profit, we call it a surplus. Finally, the balance sheet. Well, the balance sheet is the statement of assets and liabilities at the end of the year. So these first 2 were kind of done for us in the way we did the workings. So we had the clubhouse and the equipment both directly. We can just lift those numbers in as we describe them. And then we also had land at the start of the year, and unless we were told we sold it, we still must have that land at the end of the year. Likewise with investments. So therefore, to go back to the accounts, we have put in our clubhouse and our equipment, we put in our land, we put in the financial investment, which is the investments are a financial fixed asset of 60,000. So when we combine together all of the assets there, we're going to get 927,950 as our total fixed assets. Now, we have current assets of bar stock, which of course is our closing stock, and our cash. Let me quickly show you where that cash comes from. That's the closing balance here. Working 1 is the bar stock, closing cash of balance. And then at the end of the year, we also have our investment or our income due called subscriptions due. And that is 2,100. We call that a current asset. So then we have our creditors, and our creditors are amounts falling due within 1 year. We have bar creditors and we have general expenses due, both from the bottom of the sentence. Bar creditors here, general expenses due here. Then we have to simply, as we have always done, take this number and subtract it from this number to get our working capital, and you add your working capital on to get your total net assets. And then in the finance by section, we just simply put in our accumulated fund and our surplus, and we add them together to get our capital employed. When your total net assets equals your capital employed, you've done the accounts correctly for this club.